This one candlestick closure made me over 6 figures in trading, and in this video I'm gonna show you how you can spot it in the markets every single day to make consistent profits. A ton of my students have become profitable using this, so now it is time for me to teach it to you. So enough talking, let's get into the markets. I'm gonna teach you everything. So in order us to master this candle closure strategy, we obviously first have to understand how do these Japanese candles work, the basics of the basics. This is so important. So essentially, here on the left we have our bullish up candle, right? And here on the right we have our bearish candle. It is the down candle, it's the red one, and the up candle is the green one, right? So the bullish up candle always opens at the bottom and it closes at the top, as you can see. And this green part, the fat part of the candle, is the actual candle, and we want to be focusing on this one. And the highs and the lows is just an indication where the candle actually was. It was moving right here. This is the lowest point and this is the highest point where the candle was. So this is the high and this is the low. These are wicks. These small parts are the wicks. And here on the right, this is our bearish candlestick. It always opens at the top right here and it closes at the bottom right here. And this is the fat part of the candle. We want to be focusing on this one. This actually indicates where the candle is right now. And these wicks, the smaller part of the candle, these are called wicks, and this is the lowest point where the candle was, and this is the highest point the candle was. This is our simple and standard way to understand these candlesticks. Now let me show you again in the charts. So this is our bullish candlestick. It's the green one. It always opens at the bottom and it closes at the top. And as soon as this candle closed, this will appear and this will start moving and it opens right here. This is the bearish candlestick, right? The red one. It opened right here at the top and it closed right here. And remember, this candle used to be moving here, so this means it used to look like a green candle until it closed right here. And this is why the candle closure is so important. But I'm gonna now explain you how you can actually make money with this. Now we have to understand a little bit about these market trends, because when you understand market trends and you understand candle closures, you're gonna make a lot of money. So essentially the market will always moves in 3 kinds of trends. There's the uptrend, there's the downtrend, and there's the consolidation. This you have to just do not trade when this happens. This is sideways movement, consolidation. But this right here, when you're gonna make a lot of money, and this also you're gonna make a lot of money with this one if you understand it correctly. So uptrend always moves in higher highs, higher lows, higher highs, higher lows, and higher highs. And here's the downtrend. It moves in lower lows and lower highs, lower lows, lower highs, and lower lows, right? And this is what most people get wrong with these trends. People see higher highs and higher lows, they enter on the higher lows, but what they don't understand that this could just be a reversal and start trending down. But in reality, you want to enter when the candle closes above the most recent higher high. So when there's a new higher high be created, you need to enter right here and put a stop loss below the most recent higher low. And that right there is called a break of structure. I'm going to show you more in the charts. So as you can see right here, this is our bullish uptrend, right? So our bullish uptrend, remember how it moves in higher highs and higher lows and higher highs and higher lows, higher highs, right? The big move of the trend is called an impulse, and the smaller move of the trend is called a retracement. This is where the price will fill some orders, and so it can fix the price as well. And right here, you're actually not gonna buy. A lot of traders get this wrong. They want to enter right here when the candle moves down, but in reality, most of the traders will get stopped out because it actually can create a market structure shift and start trending down. What you actually want to see is the confirmation of the trend, which is a break of structure to the upside to follow this trend to the upside. When you see this up candle close, remember candle closure, this is where you're actually going to enter right here. You're going to put the stop loss below the most recent higher low right here. So this is our higher low, and you're going to follow this trend to the upside. And this is how you can make a lot of money. This is exactly what I do every single day in these markets, which now generates me of $1,000 a day. So look at this. This is right here. This is our higher highs and higher lows, higher highs. Then we'll continue up, higher highs, higher low. Remember this. This is the consolidation, remember? And this is our new higher highs, higher lows, higher highs, right? This is the consolidation happens, right? There's no volume and there's equal amount of buyers and sellers. Price cannot move. So remember this. This is an up candle closure above the most recent high. So this is a break of structure to the upside. And look at this. This is also a break of structure to the upside right here, because this up candle closes above the most recent high, right? And so you want to be buying here instead of here, because here it actually could start to trend down. You don't know it, but a lot of people are impatient. They don't want to do anything about it, and that's why they lose money in these markets consistently. And this is how you can actually make money consistently, by buying off of here instead of here. Even though you may feel fear of missing out, this is what pays. Okay, you're gonna buy here because this is our high now, because it closes above this high. This kind of closes, and you can target, follow this trend right here. Bam, 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 bam. So this right here is our strong bearish downtrend. You want to be selling right here because there's a lot of selling pressure. You want to be following the trend. Remember, there's the big banks, institutions, and hedge funds that are pushing the price to the downside. So obviously you want to be taking advantage of the price action. You want to be selling right here because this is our lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows. You get the point, right? And the thing here is how you're going to actually follow this trend is even simpler, because you're going to take advantage of the candle closure, right? These are lows, right? So when there's a candle closure, you want to be selling the market. You don't want to be selling right here, because most of the people will sell right here, but they don't know will it actually continue down, right? Even if there is a wick right like this, you never know, right? You have to see the candle closure below the low. Okay, so let's see, do we get one? No, we don't. As you can see, we don't get it. We actually just sweep it. This is our wick, and this is not a candle closure below the low. So this is not a break or structure to the downside. It could most definitely just continue up from here. So we don't know, right? We need to see the candle closure below this low. Okay, let's see again. Okay, now we get that. Now we finally get that. And now I'm gonna sell right here, because we have to follow the trend, and you're gonna put the stop loss above the most recent lower high, because remember this. Lower lows, lower highs. You want to put the stop loss above here in the downtrend and follow the trend. And we could potentially target some of these highs, some of these lows right here. Okay, let's see what happens. There we go. And look at this. What do we again create? What do we again create? This is our lower lows and lower highs, right? You want to always take note of this is the impulse, right? You want to take note of the retracement up. So this is when we create our new low right here. This is our low, and this is our lower high. Want to see a closure below this low. Does it happen yet? No, it doesn't. You don't want to be selling yet. You want to see the closure. As you can see, it doesn't happen yet. But what happens? We create our new low right here, because there's a down candle followed by an up candle, right? That's the reason. We want to be seeing a closure below it. There we go. Finally got our closure. Now what we want to do is sell right here and put the stop loss above the most recent lower high, because remember, lower lows, lower highs, and lower lows. And we sell right here. Where could we target potentially? Where could we target potentially? Maybe this low right here. This is our low in the, this is our higher low, right, in the uptrend, right? This is our previous uptrend. This is our higher low. We're gonna put the stop, put the take profit right there, target right there. This is our nice almost 1 to 1.5 resource ratio. Let's see what happens. There we go. This would have been a very nice trade right there, and as you can see, we would have profited a lot of money right there. That's the key. You always want to wait for the candle closure above or below in the trend, right? And that is how I literally make a ton of money daily, with those simple candlestick closures. And guess what? I really want to see you win. And if you still haven't got to your first $10,000 a month, if you want to achieve that consistently, then click the first link in the description. It will get you to my free course. It's time to make money. Let's go.